Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. What an exciting weekend it was in the Bitcoin space, with Bitcoin dropping or falling sub $100,000 over the weekend, potentially flashing a red flag or bear market signal. We're going to be discussing that in today's presentation, whether or not this was a red flag or a red herring in terms of Bitcoin and the Bitcoin mining sector. In addition to that, some big news from Hive Digital Technologies with the acquisition of a Tier 3 data center here in Toronto, Canada. A lot to talk about in today's episode. Before we get into it, take a second, smash the like button, you guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below. Do you think the bull market is in trouble, or do you think this is simply a regular pullback? With that being said, let's get into today's video. All right, guys, away we go. Another week of trading ahead of us. This was an interesting weekend, Anthony. We had some big geopolitical escalations, tensions. Bitcoin actually dropped below $100,000, which many analysts and technical analysts on X thought would never happen again. We've seen some big volatility there. Hash price is down. A lot to talk about on the agenda today.
Yeah, we have, and we're only talking, the last few weeks about this band that Bitcoin and nicely settled in, this 103 to 107,000. We had a couple of all-time highs. Now we've just seen that Bitcoin price break through yesterday, all the way down to about 98,500, and who's to know what's going from them? But literally within about an hour or two, it started to retrace back up above 100,000. So volatile today. We've been trying to plan this podcast for a couple of hours now. I've had to change our graphs on a regular basis because it's just showing the volatility today, and we can explain that to a certain extent.
Yeah, we certainly can. Now, we're going to come on to the miners and some news in a second here. But speaking of headlines, obviously falling sub $100,000 made headlines around the world, Anthony. Hard to dissect exactly the chicken and the egg scenario here, what caused what, but you can see news outlets across the world reporting on this number one cryptocurrency dropping into the 5 digits. Again, very short-lived. We're back up in the 102,000 and change now. But you talk about volatility. This is a great example of that. Now, moving into the miners, you've got your table here, Anthony, the heat map table. This one's nice. You can see different variations or duration time intervals here. And across the board, miners have been under pressure.
Yeah, it's not been a great 12 months for the Bitcoin miners. You've had to time your purchases, time your sales. We've talked about that before in previous podcasts about opportunities. Bitcoin is an immensely volatile asset class, and the Bitcoin miners are a proxy to Bitcoin, so they're equally in far more. If we just say the volatility of Bitcoin was, I give it a 3 as a rating, you'd say mining stocks was 6, 7, or 8 rating. It's literally, at least twice, maybe 3 times as volatile. And actually, this table highlights the issue that they have. Even if you just look at the year to date, so we're getting close to the end of the first half of the year, and if you look at the year to date, there, the average there probably about 35% down for all the miners. Even some of the recognized, performing miners, Bitdeer, said have had a great period. They've brought out all their seal miner updates. They've got a massive amount of power that they're energizing in all around the world in different continents, and the share price is 53% down from the start of the year. Albeit, you go back a year ago when some of that news was just starting to come out, and the impact of that, it's 18% up from a year ago. But, literally you look at every period other than that, it's down. And, a lot more than that. You go to CleanSpark. CleanSpark are down in every period over the last 12 months that we highlight there. 48% down from a year ago. This is one of the top performing operational Bitcoin miners out there. They're always in that sort of top 4 or 5 miners in terms of monthly production. Very consistent. Grown their operation massively. Probably one of the 2 fastest growing miners in the last couple of years that we've seen out there. And yet the share price is non-reflective. IREN have a little bit of, a green shoot. They're 11% up on the last month. But other than that, their position and 4% up in the last 5 days. So they've had a bit of a good month there, and we can come on to a little bit more about that itself. But again, you look from a year ago, before they'd even got to anywhere near the hash rate they're showing at the moment, and are about to hit 50 exahash, maybe in the next week, if all goes to plan, they're down 19% on a year to date. HUT, as an alternative, that they're up 27% from a year's position. Obviously, they've had some good news with the American Bitcoin mining company, one of their subsidiaries. And so they've had some really good, strong news out over that period. But again, you look at the last month, and they've been down on every period since then. So it's not a great position for miners. Bitcoin price has only dropped about 3% in the last 5 days. That's volatile, but the mining stocks you can see again, significantly more than that. Some are at 9%, 10%. Cypher down 10% over the last 5 days. It's 3 times the amount that the Bitcoin price is, and this is unsustainable. And we'll come on to some other things that could cause the miners problems, things that we've been noticing over this past sort of period that have an impact on their profitability.
Yeah, most definitely. I said in the intro, are we seeing red flags or red herrings here, Anthony? You mentioned IREN and volatility. IREN was up over $11 in pre-market. There was a number of people throwing around images showing IREN off to a strong start for the week, and you can see they've pulled back quite dramatically. Still holding up fairly well compared to the rest of the pack, but definitely from a retail perspective, we're starting to see a lot of buzz about IREN on social media. Now, speaking of social media, Anthony, I had put out a tweet yesterday talking about some of the rumors I'd seen circulating on Twitter over the weekend in relation to both the Bitcoin price and to global hash rate. So the first one I had heard was liquidation of Bitcoin by Iran or related parties to obviously fund the conflict. This is potentially what was causing the Bitcoin price dump. Obviously, someone was a motivated seller there. In terms of who it was, we can debate that in a second. The other one I noticed, a global hash rate, and you keenly note in many of our podcasts, this is a very volatile metric as it stands initially. We'll talk about a few reasons for that. This one actually dropped out of its range as well into the 670 exahash range. So that's definitely a red flag on some aspects, but on others, a benefit for the miners. And we'll talk about that as it relates to difficulty later in the presentation. So I wanted to get your thoughts on this, Anthony. We asked Grok, unable to confirm either one of these. So not sure if they're rumors or more concrete, but what are your thoughts in terms of the Bitcoin price action and that global hash rate drop?
Right. Well, a couple of things. One thing is, unlike the markets, Bitcoin is 24/7, 365 days a year. So we know when we have bad news, and many times the markets get bad news at the weekends, and effectively the markets are closed at the weekend. So what normally happens is Monday morning, maybe in pre-market, you'll see the sell-off of a number of stocks, because of the news implied. People want to liquidate and have cash when the bad news comes through. So the news over the weekend may have forced some sort of weaker hands in the Bitcoin space to start selling their Bitcoin, because you can sell it. You can go to your tablet now and you can sell your Bitcoin in literally seconds. There's no delays in that. It's a very, very fast liquidation of cash. And so it implies that people were selling at the weekend, because there's no other sort of other news that can confirm as to why. We've had a great run with Bitcoin. We've hit probably 5 or 6 all-time highs in the last month or so. And yes, we've seen a little bit of a pullback in this last couple of weeks, and get to the bottom of that band that we were talking about, the 103,000 there. And yes, it dipped yesterday. The news coincides obviously with your point in your tweet there about the bombing of Iran. And anything like that, we've seen it obviously with when news comes out about the Ukraine, Russia position at the moment, and also again in the Middle East with regards to Israel and Palestine. In terms of the issues they've had there. When you see significant events, not just the Bitcoin itself, but markets and people react in the same way. People who have stocks and shares will probably want to liquidate because they feel that this could bring the markets down, get out quickly, save the cash for when it goes to the bottom, and then maybe buy in and make some profit on the way back up there. And the same will be said for Bitcoin. People have sold thinking, this is the time to sell, but Bitcoin's become a lot more resilient than that in the last few years. 2021. It was noticeable that there was some massive swings on what I would call not world news, but just influential news. So obviously, when the likes of Tesla announced they bought Bitcoin, we saw a massive spike in the Bitcoin price. We've seen the ETFs eat more Bitcoin than Tesla did, in literally 24 hours on every day of the last year. This is not, this is significant numbers of Bitcoin, and we haven't seen that level of Bitcoin rise in a short period. It's been very, very steady, but the news has been consistently good, and all the way up to them all-time highs. And we've seen a bit of a pullback now. The people who really sort of not benefited from this are the miners. And the Bitcoin miners have not benefited from this. Yes, it was great when Bitcoin price was over 112,000 and the hash price was at $58 per petahash per day. But look at the last 12 months, we've seen it as low as $40 a petahash in terms of revenue there. There was a halving last year, which meant, they're only going to get half the rewards for achieving a block. The mining difficulty has increased so much that that's effectively like a second halving to these mining companies. So every time the difficulty increases, and believe you me, it's just about at an all-time high at the moment, in terms of where it's gone. And if you look at where the hash rate's grown since in the last 18 months, it went from 500 exahash all the way up to 1,000, and it's pulled back now to about on a 7-day average, about 830 exahash, but significantly higher than it was a year ago. Miners have lost a lot of production. Effectively, they felt like they've lost it twice, so it impacts on their profitability.
Yeah, it certainly does. Now, the second part of this is related to hash rate. So I did some research over the weekend. It looks like IREN, according to documented resources, had about 4% of the global hash rate. So if you assume that at 1,000 exahash, Anthony, maybe that accounts for 40 exahash. It doesn't appear that anything to do with Iran specifically was the reason for this abnormal drop, but we did come out of that regular kind of ebb and flow band. Now, you and I spoke today about some of the reasons for that. We have a slide here talking about temperature in Texas, obviously the mecca for Bitcoin mining. You also talk about energy prices, profitability. There's a number of reasons why global hash rate is so volatile, but this one did seem a little bit out of character.
Yeah, I could understand if all the machines came off in Iran because of what's going on there, and I doubt that actually occurred. But if that did occur, that's 4%, and if you're saying at sort of about 900 exahash, that's 36 exahash. That doesn't account for the sort of effectively 250 exahash that drops. But if you look over look over a longer period, you can see with great regularity that the Bitcoin hash rate drops 150, 200 exahash in regular time frames. It literally doesn't stay at one hash rate forever. And the reasoning behind this may be, and I think it's we'll need to get one of the big Texas miners to come and confirm this, but it does look like curtailment is obviously the impact of the miners and hash rate coming down significantly like that. These miners are good citizens. When things like the temperature is high and people need air conditioning during the day, miners will accommodate that. They'll switch off their facilities and they can switch them off in literally seconds, let the domestic users use that energy that they need. And then when they've stopped using all that energy, probably maybe in the evenings when there's more power available, they can then switch on and utilize that power. And this is why you see that incessant up and down, this volatility that we talk about. There's no nice linear line in terms of Bitcoin mining hash rate. It's 100 times more volatile than the Bitcoin price because it changes so much. I mean, we've gone through 1,000 exahash global hash rate on a number of times, and you're showing a slide there that shows it below 700. Well, it's been below 700 maybe half a dozen times in the last 6 months, but yesterday's was a significant drop. So maybe some of the impact of miners being switched off in Iran could be accommodated that, but 4% doesn't get you to that amount of hash rate. So we have to think a little bit outside the box, and probably curtailment, and the fact that maybe, the Bitcoin price dropping. Does the Bitcoin price at 100,000, because literally it went to 98,000 for a couple of hours, it was back over 100,000 within the same sort of day. Does that 100,000 become an unprofitable number for miners to operate? And are they switching off at that level? If they're switching off that level, this further adds to the fact that, we're not sort of like in the bull cycle anymore. It's a challenging bear cycle because, yes, from a time frame, we should still be in the bull cycle because the bull cycle ended towards the end of 2021 and the running 4-year cycle. So we should at least still have another 6 months. Some people are saying bull cycle could go on into 2026. We've been quite positive about it, but obviously miners didn't make a profit in the first quarter or the first calendar quarter of 2025, and not many miners have made profits in the last couple of years. If you go by quarter, it's been a real challenging environment for them as they try to grow their hash rate and get bigger and bigger, but actually they've not been achieving the profits to deliver that.
Yeah, it's a good point you bring up, Anthony, and especially that $100,000 psychological level. You sent a tweet back to me showing the hash rate quickly rebounding. So it is interesting to see the inner workings here. So that's essentially the bear case, you guys, for the bull market being over. We've seen Bitcoin hit new all-time highs. It's now retreating. We've seen hash price retreating, and obviously the global difficulty around all-time highs, which is representing major headwinds for the miners, not to mention now the hash rate dropping off. Now, on the other side of the coin, there's an entire other side of the camp that says, oh no, this bull run's just getting started and we're full of optimism. One of those characters is our good friend Anthony Pompliano. He's now come out through a treasury SPAC deal by the name of ProCap to go public with a $1 billion Bitcoin treasury company. So we've now seen a number of these set up. We obviously have Strategy, Metaplanet, 21. It seems everyone in the Bitcoin community is establishing these Bitcoin treasury companies. This one's significant though, Anthony, based on the size and the fact that this initial raise or funding actually eclipses what we saw from Strategy or even Metaplanet.
Yeah, this is a big talking point today. He announced it this morning on CNBC Squawk Box. They've raised over 750 million, which is actually the largest fundraise for a publicly traded Bitcoin treasury company. And we're hearing that terminology more and more week in, week out. Bitcoin treasury management, Bitcoin treasury companies. We talk about the HODL 15 100 table. That's probably going to expand. Somebody was suggesting that could be the S&P to replace the S&P 100 is as a sort of like an indices. If you're on the Bitcoin 100 list, you mean something. And actually, if Anthony Pompliano was to utilize that $1 billion and buy Bitcoin, he'd certainly move into into the top maybe 12. I think he got top 12 in terms of the amount of Bitcoin held. This is going to be this is big news today. I mean, we're not trying to put our focus on treasury management, but it's equally important to have an understanding of what these companies are doing. I, at the Mining Disrupt conference, actually hosted a panel on treasury management. I had 2 or 3 of the companies that have Bitcoin on the balance sheet and can advise other companies of doing that. So that was a really interesting panel to have there, and it's become more and more relevant since I've got back from Fort Lauderdale, because every week, Bryce, we're probably discussing more and more about companies growing on that list of top 100. It used to be pretty much the mining companies, and yes, they hold probably 5 of the top 10 places in terms of size, but now it's a whole lot of other industries going in there, and the likes of Metaplanet and some of these other companies that just literally in the last 12 months got to the highest levels on that table. It shows that they're here to do business and here to stay. I did hear one interesting fact about Metaplanet, because we've talked about the actual amount of premium that they're provided with compared to the likes of Strategy. Strategy have got approaching 600,000 Bitcoin on their balance sheet, and we'll talk about their purchase today in a second. Vastly, 50 times more than Metaplanet, but their premium is probably around about 1.6, 1.7x. When you look at Metaplanet, their premium is 7. And I heard a really interesting conversation yesterday on Spaces to suggest the reason for that is because in the likes of Japan, you can't put certain stocks into pension funds. You can't readily buy certain crypto backed funds like that, but you can buy Metaplanet. And so this is basically being given an opportunity for Japanese investors to jump into a stock that they can actually put into their plans. And it's really been, let's get in there now and let's buy as much as we can to fulfill that. And it's really grown with the country over there, with the investor community over there. It's literally, it's as if the stock was running out and everyone's trying to get a piece of it, and it's drawn the price up, and it gives Metaplanet the ability then to raise more funds to buy more Bitcoin. So it's basically like a hamster cycle for them. It's great. I mean, obviously the timing of this was fantastic for the company, and the likes of their Bitcoin analysts are supporting that strategy. Dylan Leclerc, who we've met at many conferences, and had a chat with him about the situation, and this is how these treasury companies are. But that was an interesting conversation I had yesterday, and probably does support why that premium's there, because I was scratching my head as to why that was getting such a big premium when the miners are getting no premium, and Strategy, as the biggest holder from a public company, is only getting about 1.6, 1.7x.
Yeah, and we've talked about the MNAV divided by Bitcoin yield, or the torque of these companies as well. So I think you're right, Anthony. It's being used as a proxy in the Japanese market, but I also think the rate at which they're accumulating Bitcoin in comparison to maybe a strategy that's got such a large hodl already on a percentage basis is more aggressive. So that's an interesting one. Speaking of Metaplanet, they've now acquired, again, the unique numbers here. The 4 ones, 1111 Bitcoin for 118 million, and Strategy also coming out with their weekly buy here, a little bit smaller than normal, 26,245 Bitcoins. So Anthony Pompliano's ProCap may be the new kid in town, but Metaplanet and Strategy are not giving up yet.
No. They're going to continue, and actually, you can see that the strategy that they're both adopting is really now, it's just going to continue this cycle of raising funds to buy more Bitcoin. And I doubt anyone's going to bet against them achieving their targets. I think Metaplanet have got a target of 210,000 Bitcoin, and Strategy itself, the company, have a target of achieving about 5% of the total amount of Bitcoin. So that would be well over 1 million Bitcoin, and they're already more than halfway there to achieving that. So no one's probably going to bet against them getting to that position.
No, they're certainly not. So we've laid out the bear case here, you guys. Now, as we transition into the bull, we've got some big buying in the market from those Bitcoin treasury companies. If we consult the hash price index once again, we had some red highlighted boxes earlier in the presentation. Here's a couple positive ones based on that global difficulty hash rate that we were talking about. It is implying a rather large difficulty adjustment reduction here on the 28th of June. So you've talked about volatility in relation. A lot of movement can happen in the next 8 days, Anthony, but as it stands right now, 6.8, 6.9% reduction, very bullish for the miners, and a big move downward compared to what we're used to seeing.
Yeah, I'd err with a caution. I mean, it's taking, it says at the moment, 10 minutes and 44 seconds for a block. Now, bear in mind, when it dropped yesterday significantly, that means there's obviously less hash rate. It's taken longer to mine a block. We've already seen the hash rate click back up today to probably closer to 750. And so what we'll see in the next few days is that time will start to come down. But the good thing for miners is, as long as it stays above 10 minutes, it means that they're not going to be penalized, and they might see some improvement in difficulty, i.e. the difficulty coming down, which means production for every mining machine that's on the global hash rate will get a slightly bigger share of the actual rewards that are out there. So, this is a positive thing for miners. Difficulty down, miners will get more production. They all have, it's all about having hash rate on the network. And if you've got a percentage of hash rate on the network and the total rewards are given out to a smaller amount of hash work on the network, you get a bigger share of the pie. So this is great news, but these are few and far between. I looked the other day at the last 26 difficulty changes. 19 were higher, 7 were lower. So you can see difficulty has been rising significantly, as already articulated earlier in the podcast.
Certainly has been. Now, another bullish sign we're seeing, and this time from the miners specifically, Hive Digital Technologies. They've been very active with press releases, news so far in 2025. We've talked extensively about their growth at the Iguazu site in Paraguay, 4xing the hash rate or self-mining hash rate of the company. They've now come out with a big press release today, acquiring a tier 3 data center in Toronto, Ontario, Canada. So right in the Mecca or urban hub of Canada here. And this further supports their HPC strategy under Buzz HPC.
Yeah, this is a big announcement for Hive. We know they've been announcing some big Bitcoin mining hash rate increases over the last 5 or 6 weeks, literally 1 exahash increase every week, and they've achieved their half yearly target of 11.5 exahash. This is also about their second revenue stream, which they've been, achieving now for probably 12 to 18 months. This is high performance computing. Remember, Hive had a load of GPUs from their Ethereum mining days where they were struggling to come up with a plan to deliver revenues from those. And so they decided to utilize some of them in the HPC space. And since then, they've also acquired some of the more traditional GPUs for high performance compute. This is another step in the direction that they, having your own facility, 7.2 megawatts in Toronto. You're quite right. This is Canada's leading technical hub, and this actual facility will host advanced liquid-cooled infrastructure for AI training, inference, and cloud services tailored for the Canadian enterprises, government, and innovators. Now, it will be upgraded to Tier 3 standards and capable of supporting up to about 5,000 GPUs. And this is really, reinforcing Hive's commitment to building sovereign, secure, and sustainable digital infrastructure in Canada. Buzz HPC is a subsidiary of Hive, and itself is a leader in the nation's digital evolution, fostering innovation. We're aligning with green energy goals. And both the chairman or the executive chairman, Frank Holmes, and the CEO and president, Aidan Killett, have both emphasized that the site's role in establishing Canada's next generation compute ecosystem and sovereignty in AI development. So a really good update from Hive today. It'd be interesting to see if they're going to look, once they've completed the refurbishment required to get it to that Tier 3, if they're looking for a co-locate partner, or they're going to invest in those 5,000 GPUs to fill it and to utilize it through the various types of services that will be on offer. And you can talk a little bit more about those, Bryce.
Yeah, I was going to say, if we jump over to the Buzz HPC website, and speaking of Buzz HPC, Craig Tavares, we have him scheduled to come on August 5th, Anthony, to talk specifically about HPC, Buzz HPC within Hive. So that's going to be a good one to keep an eye on. But if we jump over to their website, you can see in terms of the product offering, the service offering here, we've talked about inference, we've talked about training, machine learning, generative AI tuning. So a lot of different offerings here. And you bring up a good point, Anthony. We're starting to see quite a variety of different GPU offerings, whether it's powered shell, full vertical integration. We've obviously got the Singapore data center under Bitdeer. We've got the IREN test facility. A lot of these small kind of proof of concepts, as we call them, popping up. So interesting to see how Hive will outfit this Tier 3 facility and which of these services or offerings will be available at that location. But again, a bullish move. Now, we mentioned we'd come back to IREN earlier in the presentation. Speaking of data centers, this is a nice little way to wrap up this portion of the segment. Eric Jackson. We featured some of his X thoughts last week on the program. If you look at the multiple on revenue or revenue multiple for a lot of these data center companies, you can see IREN in the works here again alongside CoreWeave and Applied. So although Hive isn't necessarily in this one, Anthony, it implies these data center focused HPC infrastructure players are definitely being overlooked by the market right now.
Yeah, we've said this on many of the podcasts, and this is just reiterating what Eric's highlighting as well. I think with some of the miners, it's a case of we're waiting to see the named client, and IREN are in that position there. They're building this fantastic Horizon 1 facility at Children's site, which will be ready by the end of 2025. And that's a 50 megawatt for compute with additional ancillary power available within the 750 megawatts they have at Childress there, alongside 50 exahash of Bitcoin mining. But once that client's named, I'm assuming that that will impact the stock price. We do have some miners. Applied, you've mentioned one there. They do have a contract with CoreWeave, and we've also talked about Core Scientific and Galaxy as well, having contracts with CoreWeave. And then there's TeraWulf, who've got a contract with Core 42. So these four shouldn't be underestimated. We've seen Applied Digital, their share price has significantly grown since that announcement. And you can see there that he actually puts there that it's trading also at 10.3 times at 2026 revenues. So it's trading at a higher rate than some of the miners we've talked about there. It'd be interesting to apply that type of revenue multiplier into some of the miners that have got contracts, to see where their price should be as well, if they were looked at in the same way that Applied is. But it holds very good position there. I mean, he also articulates, even at 5x, the IREN share price should be at $20. Well, they've already had a $20 recommendation from a number of Wall Street analysts, and that share price is literally hovering around 50% of that target price at the moment. That's without HPC. And then if you go to 7.6 for IREN, it goes to $30. And if a deal's made, IREN will trade at maybe $41. So lots of opportunity there. It'll be good to go back and revisit Eric's tweet once we get more information about a client and see how it turned out for him and that comparison. We don't give prices on miners or Bitcoin. We're far too long in the tooth to try and do that, because as we've already highlighted in this podcast, it hasn't been an exciting 12 months for the Bitcoin miners. Bitcoin itself has had a great 12 months, great 18 months, growing really well from 42,000 start of 2024 all the way up to them all-time highs 112. Yes, it's pulled back a bit, and it's pulled back this last couple of weeks, it's impacting the miners because the hash price is down, so less revenues. But we have long-term belief that the Bitcoin price will continue to rise year on year on, and hopefully it rises sufficiently to give that margin required for these Bitcoin miners to make some sort of a profit from their services.
Yeah, we certainly hope so. We do expect Q2 to be a blockbuster quarter for the miners and the Bitcoin treasury companies. So in closing, you guys, we definitely don't think the bull market is over, but potentially a little bit of a wait or longer wait than we would have liked in the Bitcoin mining space. Now, we talk about IREN, some of these HPC opportunities for re-rating. You may want to keep that in mind as we approach Miner Madness 4.0 for your picks. That one is now live. In terms of registration or entries, you're able to do that through our newsletter. So you put out a nice tweet last week talking about Miner Madness 4.0. Also worth noting that Miner Madness 3.0 is essentially in our last full week of operation here as well. So we've seen a very productive Q2 competition compared to the numbers we saw in Q1. And a quick shout out in terms of the leaderboard, we've got Grippa Investments, Sam, and Penny Ether on the podium in terms of the analysts. And still, Anthony, I feel like the regular leaderboard has hardly changed. The Gryphon selectors or Gryphon miners still holding out the top spots on the regular board.
Yeah, the top three positions all have Gryphon in their choices, all well over 100% gains, and we've seen that share price really rally on the news of the potential, the merger that's going to happen with Hut 8's subsidiary, American Bitcoin mining company. So that's had a real benefit from there. I'm still wondering how the share price can be that high, because Gryphon only has 2% of the actual new company. So I don't see a subsidiary of HUT being more valuable than HUT itself. And if you apply 2% to the current value of HUT, that share price at the moment will be significantly less. But I'm just here as a as a YouTube analyst, and so I'm not the market itself, but the market will determine what the prices and the values of these companies.
Yeah, as they say, Anthony, we just work here. So you guys let us know in the comment section below. Do you think the bull market is over for Bitcoin and or the miners, or do you think things are just getting started? If you're still watching the video, hit the like button. Feel free to subscribe. Make sure you sign up for that newsletter and get your Miner Madness picks in, and we'll see you back here tomorrow.